When you're looking to invest into the S&P 500, the choices can feel overwhelming. You have different brokers like Fidelity, Vanguard, and Charles Schwab, all offering funds that track the exact same index. But even though they track the same 500 companies, there are subtle differences that can impact your long-term wealth. A couple of years ago, I made a video comparing two of the most popular heavyweights, Fidelity's FXAIX and Vanguard's VOO. That video helped thousands of you decide, but markets change, fee structures evolve, and I wanted to give you a completely updated guide. If you're on the fence about which one makes sense for your goals, you've come to the right video. We're going to break down the technical differences, the tax implications, and the performance data. Hey guys, my name is Paul and I talk all things investing and money. Before we get into the video, make sure you smash that like button and subscribe to help out the channel at no cost to you. Before we compare the two, let's cover the basics. An S&P 500 index fund is an investment that mirrors the S&P 500 index, which tracks the 500 largest publicly traded companies in the United States stock market. Instead of buying 500 individual stocks, you buy one fund and instantly get exposure to giants like Apple, Google, and Amazon. These funds are incredibly popular because they've historically provided an average return of around 10% per year over the last several decades. It's the ultimate set it and forget it strategy for building a multi-million-dollar portfolio. Let's dive into FXAIX first. This is Fidelity's S&P 500 index fund, and the headline is the cost. It has an expense ratio of just 0.015%, which means that you pay just $1.50 for every $10,000 that you invest. This is practically free, and it's literally one of the cheapest ways to own the entire S&P 500. And historically, its 10-year average return sits right around 15.49%. It's inexpensive, it performs exceptionally well, and it comes from Fidelity, a name synonymous with low-cost investing. If you're already in the Fidelity ecosystem, this is often the go-to choice. Now let's look at VOO. This is the ticker symbol for Vanguard's S&P 500 ETF. For context, Vanguard is the OG creator of index funds, but interestingly, they've allowed competitors like Fidelity to actually undercut them on price. VOO's expense ratio is sitting at 0.03%, which means that you'd pay just $3 for every $10,000 that you invest. While this is technically double the expense ratio of FXAIX, we're still talking about pennies. The biggest advantage here is that VOO is an ETF or exchange traded fund. This means that you can buy and sell throughout the day during market hours, just like shares of a stock. This ETF holds pretty much all the same stocks as FXAIX, and its 10-year average return is nearly identical, coming in at 15.46%. Now, I get asked all the time, Paul, if they track the same thing, what's the actual difference? Let's look at the three pillars that actually matter. First, the cost. Fidelity's FXAIX is technically cheaper at 0.015% versus VOO's 0.03%. To put that in perspective, on a $100,000 balance, FXAIX costs you $15 a year, while VOO will cost you $30. While FXAIX is half the price, the difference is so small that it shouldn't be the only reason you switch. Second, the tax factor. This is where the decision usually gets made. If you're investing in a tax advantage account like a Roth IRA, 401k, or HSA, FXAIX is often the winner. Since you don't pay taxes on dividends inside these accounts, the lower fee makes it mathematically superior. However, in a taxable brokerage account, VOO has a slight edge. Because it's an ETF, it's structurally more tax efficient than a mutual fund. Mutual funds can sometimes be forced to sell internal holdings, triggering taxable capital gains for you if other investors sell their shares. ETFs generally avoid this through in-kind redemptions. Third, portability and mechanics. FXAIX is a Fidelity-specific mutual fund. If you ever want to move your assets to another broker, you might have to sell it, which will trigger taxes. VOO is portable, which means that you can move it to any brokerage in the world for free. Also, remember the trading mechanics, as VOO trades all day, while FXAIX trades just once per day. Now let's talk a little bit more about the money. Which one actually has better returns? Like I mentioned earlier, looking at the past 10 years, the difference in annual returns was only 0.02% or 0.03%. This means they are functionally identical. However, a major difference is the dividend factor. Over the last 5 years, VOO outpaced FXAIX slightly in terms of dividend distributions. So if you're a dividend-focused investor who wants the quarterly cash flow, VOO might give you a slight edge. But for most of us, we're looking at total return and the power of compound interest. So here's the final verdict. Which fund is actually better for you? Stick with FXAIX if you're investing inside a Roth IRA or 401k and plan to stay with Fidelity long-term for that absolute lowest cost. Stick with VOO if you're investing in a regular taxable account or want the freedom to move your money to a different broker in the future. But at the end of the day, both are gold standard funds. The most important takeaway you should take from this video is this. Don't spend months debating between a 0.015% and a 0.03% fee. The reality is that the real wealth is built by consistent investing. Pick one, Set up your recurring deposit and let time do the heavy lifting. That is it for today's video, guys. Thank you so much for watching. If you learned something new, make sure to smash that like button and subscribe if you haven't already. If you want to get started with investing into a fund like VOO, I've left the link below to sign up for SOFI, which is a personal brokerage that I use. If you use the link to sign up, you can get $25 in free stock after you sign up and make a $25 deposit. Now is the time to take action on your investing journey. Let me know in the comments, which one are you buying this year? Or are you a fan of a different fund entirely? Always remember that your life is a masterpiece, so let's unlock your full financial potential together. And with that, I will catch you in the next video. Take care.